Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So guys, we're going to go over the overall portfolio value. Of course, the value by the metrics, our buying power, as well as how the individual stocks are performing. We're going to see if anything's super overvalued to the point where I wouldn't purchase any more shares versus if there is any opportunities that I want to take advantage of before the end of the week. I get paid on Friday. So we will see if there are any deals that I want to add to. As of right now, Apple is the main goal. Just the overarching goal for the portfolio is to have at least 20 shares of Apple by the end of the year, which I think is very doable. As well as boost up those other two positions as in Visa and Google. I do want those to be the second and third biggest positions. So depending on where prices are at right now, we will see if any of those are a buy. And see if I want to allocate any new capital towards any of the positions within the portfolio. Then for the watch list, we have two stocks as of right now, Costco at 923 and Berkshire Class B shares because I'm not filthy rich. I can't afford a Class A share that is worth like 3 to 10 of my houses. So as of right now, A is a no-go. But Class B shares, I would happily add at least a couple. So, jumping in for today, we're sitting at $54,931. Of course, it's going to fluctuate due to the market being open. For the 1 week mark, we're down $470 with around a 1% loss. That 1 month mark, we are down to we're up $289, half a percent. That 3 month mark, we're at $4,700 with a 9.4% return. Year to date, we are up $5,400 with an 11% return, so matching the overall market for year to date. That 1 year mark, we were up $11,400 with a 26% return, so 1 year we're doing great. And then all time, we are up $28,768.97, a 110% return. And guys, keep in mind, I started in April of 2018, so we are getting close to 18, 19, 20, 21, 22, 23, 24, 20, almost 7 years in the market now. So overall, guys, I'm really happy with this. You know, the portfolio goal is simply to make more money next month than you made last month. So we use dividends to buy the next company that will pay us in the next quarter, and my income just keeps going up. And while some of the positions have changed, like I used to own like AT&T, or I used to own like VF Corp, I've owned Allstate before. The positions change, but the goal stays the same. So regardless of whether I think the portfolio makeup is going to change, the overall goal of the portfolio and how I'm achieving that goal has stayed the same over the course of the past, decade essentially. So as of today, we're going to check and see if there are any deals and any prices that I can buy at an overall lower cost basis, so my overall returns will be higher. The buying power sitting at $4.12. That's gonna sit pretty in there until I get enough to buy another share of something else. So jumping right in for realty income. It is a dividend aristocrat, which means that it's paid for 25 consecutive years. Sitting at $56.24. We only have 5 shares. $281 of market value. Average cost is $51.75. Half a percent of the portfolio is in realty income. Today we're up $2.30. Total, we're up $22 with an 8.7% return. Guys, I want to buy it, but I want to wait until it's around that $50 mark, right around my average cost, $51 to $52, and I will be adding more. But the main goal for this position specifically is I think of this as my Social Security, or I think of this as my pension fund. This is one of those stocks that it does not grow very much. I don't want it to go up that high. I don't expect double-digit returns. I don't expect crazy dividend growth. What I want out of this company is just steady Eddie income, right? I want it to go up a little bit, but I want it to be, more importantly, consistent. I want it to just pay me every single month, and that's what this stock is known for, and it's been known for it for over 25 years. So the goal for this position is to just kind of cushion the blow when it comes to market volatility and maybe dividend cuts as well. So eventually, I wouldn't be surprised if realty income paid me my paycheck, like $3,000 a month or something like that, to compensate my income, and then everything else on top of that is just gravy. So this is just extra. So this would be one of those that I want to be a relatively big position, probably like I've had it at $10K and I made about $40. So this would be like the $120,000 position that I don't add to, and it just keeps on compounding. I want to realty income to the point where it's paying me the same as my paycheck. And then I probably won't add anything else, because this is not, like I said, this is not going to be a high growth position. This is just going to be here to compensate to really replace my paycheck. But it's going to be the Google and the Visa and the Apple in the portfolio that are really going to push for the growth. This is more my safe haven spot for cash. Think of this as like my gold position for some of the people who think they need a bunker, right? So overall, guys, this will be one of the smaller positions, if not the smallest behind, say, like Altria. But this overall, in the grand scheme of things, is going to be a very important position in the portfolio that should not be overlooked or ignored. So next up, and I'll go through the metrics as well. So we're up as of right now, and as of today, I don't want to purchase it. My goal price would be around $50 to $52 a share. So I'm not buying it currently, but like I said, this will be a large position, but eventually I think it will definitely be outpaced and be one of the smaller positions, just given time. Altria is a dividend king, 50 years plus of dividend growth, $57.57 for the market price right now. We have 320 shares, $18,400 of market value. Average cost is $47.27. 33.5% of the portfolio is in Altria. Today we're down $12.80. Total we're up $3,200 with a near 22% return. So guys, this is the main cash cow right now as of today in the portfolio. Altria pays me today enough, about $320 every single quarter. So a little over $1,200 a year. And the goal for every position is to buy the next month. So Altria right now, where it's sitting, is enough forever, as long as Apple stays below $300 per share, to buy me a share of Apple. So Altria will be purchasing Apple shares, and then eventually Coca-Cola will, in theory, buy AbbVie shares. Now that will take a while, but then Apple will go ahead and buy Apple will buy, say, Visa, and then AbbVie will buy Google, right? So it just depends on where the stock prices are at, and of course how much the dividend income, how much income comes in each month. But as of right now, the goal is to let Altria pay for Apple for the foreseeable future. So my goal for this year, the overarching goal for the portfolio, is to get 20 shares of Apple, right? I said that at the intro. So if that's the goal, then automatically every single year, as long as the Apple share price stays below that dividend payment of Altria, I will get 4 free shares of income, shares of from Apple, and get my income boosted automatically every single month. So that's the beauty of this strategy, is I'm adding money now to the portfolio because I'm debt free and I don't plan on getting back in debt, so I'm allocating some capital towards my portfolio each month. But the beauty of it is I don't have to do that at this point. Now if Apple gets to like $400 a share, something like that, then I'll have to put more into Altria in order to keep that going. But as of right now, when it comes to the setup with Altria buying Apple, I'm good, right? So this is the long term, like say I'm 40 years, I'm turning 30 this year, say I'm 40, 45, 50. The long term goal is to have, Apple pay for something with dividends, is to have Google do the same thing, Visa to do the same thing. And with those specific companies, it's going to take a lot longer because it's going to take a lot more capital because the dividend is not as big as Altria. So for today, the cash cow of the portfolio is definitely Altria, and I'm excited about that because, like I said before, it's 4 free shares of Apple for every year for the rest of my life. So that will help get me to 20 shares a lot faster. Next up, we've got Coca-Cola sitting around $69 per share. We have 15 shares, a little over $1,000 of market value. Average cost is $60.54. Around 2% of the portfolio is in Coca-Cola. And honestly, guys, I have a 2-liter right here. I'm sipping on it right now as I'm doing the video. We've got $1.35 in the green today, $123 in the green total with a near 13.5%, both return. Dividend coming in on April 1st. This one's a little weird. It pays $147.12 instead of $7.10. So both Pepsi and Coca-Cola kind of have weird payouts. Usually it's every 4 months, but I do believe because they see a spike in sales during Christmas, or they're known more for Christmas time. That's when they do a lot of their ads because they put Santa Claus in their ads. They pay during Christmas. So every December I'll get a nice check from Coca-Cola as well. So dividend coming in on the 4th. So they actually pay 4, 7, 10, 12 instead of 1, 4, 7, 10. So it's a little bit different here with Coca-Cola. Sorry, I think I missaid that because it's habit for it to be 1, 4, 7, 10, but Coca-Cola switched it. So it's 4, 7, 10, 12. So on April 1st, we will be getting a dividend of $7.65, and I will just let that continue to compound within the composition of the portfolio. That'll just add to my cash, so I'll have a little bit more than $10 in the portfolio, and depending on the prices of what stocks are at on Friday, I generally try to transfer over enough to buy a share of Apple. So it should be about $220. But as of today, Coca-Cola doesn't have enough free cash within bringing into the portfolio to purchase anything. This one would be buying AbbVie, and it will take a while. AbbVie's sitting at $200+ a share, so you could add another almost 300 shares, I think, and I still probably would struggle to buy a share of AbbVie. And the thing is, too, I don't want to buy AbbVie at these prices, so the beautiful thing is once Coca-Cola gets to that spot, I can either add a new position or I could just be more aggressive with Apple, which I think is probably what we're going to do. But the other alternative is I could go ahead and buy a share of anything else in the portfolio, like, say, Google, depending on prices, like Google, maybe even Visa. Or I could save some cash to put towards Costco or Berkshire stock as well. So even though it's not a huge dividend, I get this comment a lot on my Instagram. Like, I know $7 isn't life-changing, right? And that's something that is super important when you're starting out. Like, it's not a new position for me because I've owned like 70 shares before, and I felt like it was overvalued, so I sold it, put it into AbbVie, and that ended up being a really good position for me. But overall, this is one of those that I want to hold forever. I was stupid to sell it when I did. I should have just held on to it. Just like I said, I was dumb for not buying Apple stock like the day one when I was investing. But this is one of those companies that I drink it every day. It's active in my life. I understand the business. I understand the economics of the business. People have brand loyalty, as do I. So it's one of those that, yeah, it's not a Google, it's not an Apple, but I still think it deserves a top 5 spot because I have so much merch. I have so many Coca-Cola shirts, and it is one of my planned vacations in the next, handful of years. We're going on a cruise in a year and a half, but one of the landmark places I want to go is to the Coca-Cola, just overall Coca-Cola in Atlanta, and go to their headquarters, check out all the different flavors, and really just enjoy the overall atmosphere of what Coca-Cola brings to our everyday life. So that is definitely a trip I want to get planned, is to go to Atlanta, Georgia, and the HQ of Coca-Cola, try out all the different flavors, see all the history, like all the ads and stuff like that. I'm such a fan of the company. So even though it's not a big grower, even though I know $7 isn't life-changing money, it's not even minimum wage here in my state, it's still money, right? So don't get discouraged if you're starting out and you see, $1 from Google or, 75 cents from Apple or whatever the dividend income is. The main focus that you should have is that you're making money by not having to go to work, right? Your money is essentially, you're a bank in this instance, and your money's making you interest. So even though, $7 on $1,000 doesn't sound like a lot of money, eventually as it compounds and you hold it over time, it will be more than you realize, right? So even though it's not Google or the sexy tech stock, I'm still very bullish on Coca-Cola in the future. Next up, we got Apple. Now, this is one of my personal favorite stocks, sitting at $219.19. We have 11 shares. We need 9 more to get to our 20 goal. But right now, we're sitting at $2,400 of market value. Average cost is around $220 per share. 4.3% to 4.4% of the portfolios in Apple. Today we're up nearly $10. Total, we're up nearly $10 with a 0.37% return. Guys, I'd buy it below $220. It's so close to my average cost. If I can get it below $225, I'd add it. So it just depends on where it's sitting at once I get paid this Friday, but I do plan on transferring over about $220. So I'm excited for that. Next up, we got AbbVie, down a little bit today, but I'm still way, way, way up. So sitting at $208.50 right now. 95 shares, $19,827 of market value. Average cost is $95 per share. So we've more than doubled our income, or doubled our stock price as of right now. 36% of the portfolio, so a third of my money's in AbbVie stock. Today we're down $123. Total, we're up $10,700 with a 119% return here on the stock. So guys, this is by far the best investment that I have ever made. I plan on holding it. A lot of people, when they have a winning stock, they sell out of it. They cut the growth and they take the money and put it somewhere else. I don't want to punish my portfolio because a position's doing well, right? A lot of people, a lot of investment managers, when they see a position that gets to more than like 7 to 10% of your portfolio, they freak out. I'm not that type of investor because I don't want to, even let's say, even if AbbVie drops down to like $100 a share or like $80 a share or something like that, I'd buy more, right? I believe in the company long term. I've believed in it for half a decade at this point, a little over half a decade. I think I bought this in like 2019, I think. So it's essentially held it for most of my investing career. And unless the economics or the leadership change in a drastic way that makes me change my opinion or the economics on the company, I'm not selling the stock. So when I first bought this company, it was paying me $107, I think, a quarter. Now it's up to 155, so almost $160 a quarter. So I've gained 100% on my money with the stock price. And then I've also gained like almost 40, almost $50 a quarter at this point, every single quarter for the rest of my life, as long as profitability stays within the company. And the economics don't get interrupted and leadership doesn't decide to cut the dividend. So the way I look at it is, eventually, if I give it enough time, I feel like the dividend growth for AbbVie is going to make it, just by holding it, so I can buy a share of Google. So that's something that I'm excited about, because I don't plan on adding to this position at these levels. Of course, I would be, drastically bumping up my average cost, and my overall return would be lower because I'm buying at a higher price. But if it ever dropped below my average cost, I wouldn't freak out about the lost gains. I would literally just buy more. So for me, again, it's the main strategy. It's not about the actual stock price going up. I don't care about that, right? It's cool to see $10,000 gains. It's cool to see 100% gain on an individual position, but that's not why I'm here, right? That's not my goal. My goal is to get consistent and growing passive income every single month. So AbbVie, even though it's up triple digits, it's still fulfilling the goal, right? AbbVie, with a little bit of extra cash, with like what I generally would have left over from, say, Altria from the Apple buy, should have enough cash to, because it's like $320, Apple's at like $220 right now, so I'd have $100 extra, and then with the $150 that I'd get from AbbVie, I'd be able to successfully buy a share of Google forever. So that's why like Altria is super important, because the income that it brings in is super important, because it offsets the lack of dividend income for that second month. And it's even worse now in the third month since I bought Visa. So either Altria's money would help AbbVie buy a share of Google, or it would help Visa buy a share of Coke. So, and it might even be able to do both, because it's $100. So, if Google is sitting at less than $200 a share, AbbVie pays $155, so AbbVie would really only need like $25 to buy a share, or $30 to buy a share of Google, which should then leave enough money, like $70, $60, $70, for the extra Altria money to carry over to the third set of months. So when Visa pays me that like $27 or whatever it is, I will have enough cash to either buy a share of Realty Income or Coca-Cola forever, just with that Altria dividend. But eventually, guys, I do think that the overage of Altria will be less dependent on that in the future, because AbbVie will grow dividend-wise so much over the next course of like the next decade. Then we've got Visa, which is up huge at $342.77. We now are still below our average cost, which is awesome. This is one of those that I would buy as well. 35 shares, almost $12K of market value. Not surprised to see it going up. Average cost is about $350 a share. 22% of the portfolio, I just rounded it up, of the portfolio is in Visa. Today we're up $250, 2% gain. Total, we're still down $170 with about a 1.4% loss. So guys, still a nice buy opportunity here for Visa. I would love to add more. I want this to be the second biggest or the single biggest. I would not be surprised if Visa outpaces Apple and becomes the biggest position, and I wouldn't be mad about it. So this is one of those that, even though it's down, it's still below my, excuse me, even though it's up, it's still down below my average cost, so I'd buy more here. I'd probably buy Visa probably below like 355, 360 is probably my cutoff. So as of right now, it's definitely a buy for me. Then we got Google at 170-ish. We've got we got 6 shares, $1,015 of market value. 193 is our average cost, so a great buying opportunity here. 1.85, so about 2% of the portfolios in Google. That will definitely be going up. Today we're up $18. Total we're down almost 150, down about 12.5%. So as of today, I still think overall Google is a better buy because it's about $30 short of our average cost, like $22 short, and Visa's only $5. But given the fact that Visa's a bigger position, it's down more, of course, comparing dollar amounts. So either one of these would be a great buy. Just because I don't want to take like a third of my check out, I obviously would be a little hesitant to take out like $400 out of my check for the week. So given we had a puppy issue, we had to take our pup to the vet and he has arthritis, so we have to give him meds and stuff like that. So I have to adjust my budget a little bit, so I might not be able to put as much money on the second check towards investing. Instead of like $250, I'd probably bring it down to like $200 to cover his meds. So it just depends, but I think it'll be a while before we end up buying Visa. I don't mind being focused on Google, especially because I feel as of right now it's the best deal in the portfolio, as long as Apple isn't below our average cost. So when it comes to what I plan on buying, Apple I'm okay buying pretty much at any price right now, especially because it's lower. But if Apple gets to a price that I think is like obscene, I'm going to switch it for Alphabet, or I'm going to switch it for Coca-Cola. So even though the goal is to buy Apple, I still have like Google and Visa as a very high priority, given I have the cash on the side. Then, of course, anything below like $9.50 to $1,000, I'm buying Costco, because they're still down pretty low. I mean, for the 1 year mark, if you look at the last, $28, 120, there we go. So in the past month, they've lost almost 12%. They were over $1,000. So if you were buying at $1,000, this is a great buy price. If you're looking at the low to high, the low's about 700 and the high is 1,000. So you have a good like 7, 8, 9, 10, almost a $400 spread on this stock. So I mean, you could be sitting and waiting. If your average cost is like 800, this could still be pricey. If you bought it at the high, then this is a steal. So this wouldn't be a bad place to initiate a position. I'd be pretty happy with it, considering I was thinking $9.50 was an okay price. So overall, guys, I'd definitely be buying Costco here, especially if it was a beginner position. But I have $1,000 sitting on the side. I have like $4,000, but I don't want to purchase it here. I want to save my cash. And then of course Berkshire at above 500. The low to high about 400 to 520. I'd buy it around 400. I mean, if I was initiating a position, if I'm buying a single stock, like a single share, I really don't mind. I don't pay as much attention to the low to high and where it's at, because I can always buy lower and I can always sit on it and let it ride if it gets higher. But the mental note that I'm trying to keep in the forefront of my mind is, if I buy one share of Berkshire, I want enough money on the sidelines to buy 2 shares when it drops below that price, right? Which that strategy is really hard to do when you have a stock like AbbVie, where it's like a $10,000 position. When you're initiating, it's a little bit easier, especially when the stock prices are so high. Like, I don't know anybody who can just, like, personally in my life, that could just be like, yeah, Berkshire's down to 520 and I have it 525. I'm going to go ahead and put $3,000 in today. I don't know anybody like that. So it's important to set money aside for deals like that, for opportunities like that, and not get so focused on the I can buy Google or I can buy Apple today. Like, important opportunities like in the day-to-day are important to take advantage of, but how you really make your money is those big drops, right? Is Costco goes from 1,000 to 900 and you still think it's worth $1,000, then you can buy, like, say you have like $10,000 on the sidelines and you can pour $10,000 into Costco and buy it, and have a profit of like $100, so you'd make like $1,000 in however long it takes the stock to go up, right? Those are the deals, like the AbbVie deals. that make you a crap ton of money, and those are the deals that you really want to focus on. And more importantly, you want to have enough cash on the sidelines to really take advantage, and that's something that I've made shorts on, and I've talked about it in videos. It's so important to have money on the sidelines, right? Like, I'm terrible about this. I'm horrible, right? Buffett is so good at being able to do nothing. I am so active when it comes to buying shares because I want my income to go up, right? So I need to be better, and it's a good lesson for newer investors to not get so caught up in short-term price fluctuations, to always have a long-term view and, evaluate your stocks properly. So with all that being said, guys, thank you so much for watching. Remember to hit the like button on the video, hit the subscribe button on my channel, That Dividend Guy. Guys, we are almost to 2,000 subscribers, which is insane. We've been growing like crazy. The shorts have been helping. The daily videos have been helping. I do apologize for the past couple days. I did flip my schedule. We had family stuff, and our puppy had to go to the vet. So it's kind of was a crazy week last week. But I do plan on. I'm back on my normal schedule, my 2 to 11, and it's easier for me to record during the day. So thank you guys so much for watching, and I will continue with the updates and the shorts. I'll see you guys tomorrow. Take care.